We continue with taking a look at the just released fourth quarter job statistics. We now compare last quarter's numbers with the current ones and look at the worst hit sectors with FNB Chief Economist Mamello Matikinca-Ngwenya. Very good afternoon to you, ma'am. Good to have you with us. If you could help us make sense of the data that we've just received here. We're looking at the jobless rate rising to 32.5%, but if you look at the expanded definition, it's 42.6%. What is your inclination? We were having a bit of a banter earlier on with our business editor, whether our country should actually be using the expanded definition or not. Your thoughts?
Definitely. I think if one looks at the two, it's bad nonetheless. So we saw the official unemployment rate increasing to 32.5% and the expanded definition increasing by, give or take 10% more, above 40%. I think the point here really is that the impact of the pandemic has had a severe impact on the labor market. So essentially, I think if we look at the breakdown sectorially and we look at sort of sequencing from when the pandemic hit, we saw that it was your more output sensitive sectors that initially, experienced a decline in employment. And interestingly, in today's data, we're seeing that your professional services are also starting to shed labor. So these are sectors like the financial services sector. So we're seeing sort of this lag effect of the pandemic in the labor market. So I think, in total, the economy shed around 1.4 million jobs last year, which is quite severe. And I think we need to have serious conversations about, the path forward.
And which are the demographics that have been most affected by the job hemorrhaging?
I missed that. If you can just repeat that question for me, please.
Yes, sure. I was asking you about which demographics were most affected.
So I think if we look at the numbers, it's mostly your low skilled Black individuals that tend to be impacted. But what is quite interesting in this data set, specifically for the fourth quarter, is that if we look at it from a skills point of view, that is your professionals that are starting to feel the pinch or to feel the negative impact of the pandemic.
And now, according to the data that we've received here, there are some sectors that did see an increase in the number of employments made in the fourth quarter. Which sectors managed to hire more people?
So I think most of the sectors excluding your agriculture and financial services managed to create jobs in the fourth quarter of last year. I mean, if I look at these numbers in the context of what we were expecting for the total unemployment for the year, it's certainly coming in slightly better than what we had anticipated. So we saw all sectors excluding mining and financial services adding employment in the fourth quarter. And our expectations are for that 1 in 5 jobs that were lost last year will be added into the economy this coming year.
The fact that now we are starting to see the rollout of the COVID-19 vaccine, albeit only in the healthcare sector for now, and we are anticipating more of the Johnson & Johnson vaccines that are coming into the country at periodic rates. With all of those factors in mind, what type of a time frame are we looking at to perhaps starting to see an increase in the number of people who are actually being employed in the country? Perhaps our economy is starting to once again gain its feet and stand on its feet.
I think it's going to take quite a bit of time. So I think if we take lessons or draw lessons from what happened in the financial crisis, we saw that the economy took quite a bit of time to get back to the levels that it was before the crisis. So I think if we look at the nature of the pandemic and we look at the impact that it's had on the overall economy, it's been quite severe. So our expectations are for GDP growth to have contracted by around 7.2% this year. And as I said, we're expecting 1 in 5 jobs to be gained in the economy this coming year. So that says to us that it will probably take quite a number of years, 3 to 5 years, before we start to see the economy back where it was before the pandemic.
And how badly do you believe these numbers and will knock the confidence leading into tomorrow's budget speech?
So, I mean, I think, just to give a bit of context, just in terms of, our expectations for tomorrow's budget. So there was quite a bit of uncertainty, I beg your pardon, around the impact of the pandemic on the economy. You would have noticed that a number of analysts actually revised their numbers as we got more data and more certainty around the impact of the pandemic as we moved through the different quarters. So when National Treasury penciled their growth expectations last year, so they were looking at a contraction of around 7.8%, close to 8%. And the data at hand currently suggests that it could be slightly better than what they had anticipated. So that's point one, which is quite important. And then the second point really speaks to tax collection. We're expecting National Treasury to have actually performed better than what they expected in terms of revenue collection. Our estimates suggest that revenue could run about between 100 and 150 billion. So, I think this again just speaks to just the level of uncertainty. And then if we look at the breakdown in tax, corporate income tax is around 90% ahead of target, and personal income tax has also improved quite a bit. So we are monitoring that, and that is important in the context of this labor data that we have received today, because our expectations are that the labor market is going to remain quite weak. So personal income tax is going to also remain under a bit of pressure as we look at what the National Treasury is expecting for the coming year. So I think tomorrow's budget should be viewed in the context of what National Treasury expects for financial year 2021 into rather 21, 22 into 2023. So I think the labor market is probably likely to stay under a significant amount of strain in the absence of economic growth and businesses thriving or being able to absorb these large numbers of people into the economy. The numbers today certainly show that the labor absorption rate has decreased, and the participation rate, so more people are looking for job, has also inched up slightly higher. So I think if we are wrong on our estimates that the economy is not able to add the number of jobs that we envisioned, it will certainly have an impact on future income tax collection, more specifically personal income tax. And I think it will obviously weigh on demand. So this will bring VAT receipts also under pressure. So I think in terms of today's numbers on the impact of the past financial year, it shouldn't have a material impact because we have data that suggests that taxes are running ahead. But I think we need to think about the labor market in the context of the coming financial year.
Now, if a third of our population is unemployed, as these numbers suggest, how important will a budget which is targeted at job creation be at this point?
So I think, I don't envy the minister's position right now, because what we know for sure is that, South Africa's debt is increasing significantly, and it doesn't show signs of slowing. So this means that your debt service costs have also increased and have the potential, obviously, to erode spending from critical items. They explain that quite at length in the budgets over the past couple of years, that as your debt service costs increase, you're obviously allocating more money to pay for that, crowding out spending on essential items. So this essentially means that, the minister really needs to think about consolidation, right? And consolidation becomes quite tricky when an economy is not performing quite well. So the minister indicated last year that they see, or they envision, compensation of employees coming down quite a bit. So this is with wage freezes, and I think implicit in that is headcount reduction. So obviously, this is not a great picture in the context of what we're seeing in the labor market, if indeed National Treasury is successful with their consolidation efforts over the medium-term framework, which essentially entail a reduction in wages and to some extent a reduction in headcount. So I think a bigger conversation to have is how do we stimulate employment growth in the economy? How do we get the private sector to participate a little bit more? And how does government actually coordinate with the private sector so that the private sector creates jobs? I don't think the state should be creating jobs. I think the state should enable the private sector to create jobs.
And we'll leave it at that for this afternoon. Thank you so much for your input. That's FNB's Chief Economist, Mamello Matikinca-Ngwenya there.